Welcome back, guys. This is a real-time market review. So I'm just doing market review as I go. So you see all the annotations. I'll make the annotations right here immediately as we go. So I'm starting with the pre-market session, and I'm referencing Asia from 7 p.m. to 5 p.m. I'm looking at the sell stops below this low. These are relatively equal heading into pre-market. So I want to note this as Asian sell stops. So I'll just tag that to be major pool of social liquidity going to the pre-market session. And these are Asian lows. I already have that annotated. I did that during the session. And right here I have London highs. So I'm marking out London highs. And actually this is London's low. So pre-market major sell side is actually London's low. I could just label it properly, London's low. So I'm referencing the London open. I'm talking about London open low. So pretty much that's all I need from this chart. So it's 2 a.m. to 5 a.m. London high, London low. Asian lows are down here. These are relatively equal too. But if we were to get here, I want to sell straight to Asia. So that's what I need from there. These are relatively equal as well. Right here. So I could just reference that as a low of the 4-hour. This orange shaded area is the 4-hour inverted fair value gap. So if we trade above this and close strongly above it on hourly time frames and higher time frames, I'll go back to a bullish bias. Now I'm looking at the pre-market session from 7 a.m. to 9 a.m. or 9:30 a.m. That comes right here. So this is 7 a.m. Right here, this is London lunch. So London lunch highs are right on par with London highs. London lunch lows are right on par with these relatively equal lows. I might as well just mark those out. So right there, I could call that major source of liquidity. Going into the pre-market session though. So in the pre-market session, I'm focusing just on the buy side, which is London highs, London lows, this major sell side, and then maybe Asian lows if it gets animated. But it's mostly a small range, and 7 a.m. comes in here, 7:01 comes in here. So this particular buy side imbalance, sell side inefficiency is the Reaper or first presented value gap after 7 a.m. So that's important. Now in review, price forms this and rallies up. It sweeps the buy side. So London highs are engaged. The sell stops are resting here. Sell stops are also resting. London lows. So during this pre-market session, the objective was buy side and then sell stops. So framing a setup in these conditions would be maybe an inversion here. 8:30 a.m. opening price comes in right here. So this 8:30 is open. By this time price has traded below the Reaper. It has retraced up to it, and the bodies of the candle are staying within it. Then we see this displacement to sell stops, mina open, and then we see London session low taken at the open. So just a 9:30 London low gets taken. I think this is a setup for this session using the Reaper and using the liquidity. So this buy setup up to London session highs is probable, but the problem with that is I don't really see how this buy setup plays out. In terms of an entry, apart from here, there's a BC. The range is so small from here to here. That measures to be 21 handles. That's irrelevant in terms of the Nasdaq. So I'm looking to see this short after buy side is engaged. Next objective during the pre-market will be sell side. So major sell side liquidity is taken here, but then London session lows have not yet been tagged. So even if we're going to be bullish on the open or after the open, once you see sell side engaged, so during the pre-market session, those things are probable. So sell stops at London session lows. I believe a setup using this as an inverted value gap, targeting London session will give good partials below this low. So it's a short-term low for partials, and terminals will be given at the open with this massive breakdown. And today you could see the open range gap was minimal, but it was a gap up. It was a small gap up, roughly about 30 handles, and we see price trade down for gap closure. So you could hold this trade because during the opening range, price is expected to go to mid cap, and mid cap is below. So I think that's a good setup for the session. It would look like this in terms of risk to reward. An entry on the low of this inefficiency. Again, I'm talking now in hindsight. I was not active in pre-market, and I think the stop loss would be safe above this array. So we have the sell side balance here, which actually sweeps liquidity. So it's a valid sell side balance by an efficiency. So stop above that level rounds up to 35 handles, and targeting the London session lows brings that trade to 2.69R. That's decent. The trade would have lasted maybe an hour roughly, and I think that was a move for the pre-market session. Now moving on to the New York AM session. I actually debriefed this session. I'm done for the week already. Based on what you saw me do on Tuesday, the reviews are up on the channel, the trades are up on the channel. So based on that trading, I'm done for the week already. We are quite early, but I made my objective for the week in terms of handles and in terms of dollars. So I'm out debriefing this. I saw some high resistance liquidity run conditions at the beginning of the open. So after the sell stops were engaged, pre-market lows were taken. The New York ATM model requires sell stops and then buy stops at pre-market high. So I'd mark out pre-market high, but also if you look at the daily chart, I'm bringing up a screenshot of the daily chart right now. So if you're looking at that screenshot of the daily chart, you can see me on this annotation here. I'm drawing your attention to previous day's high, the one with this eye icon within it. So I said note right here. I said note previous day's high with the eye. So that's a draw for this session, and NQ was looking as if it's rejecting the sell side. It was rejecting the point we referenced as last line of defense. So the bodies were closing up, as you can see, and I wanted to see price rally during the open or during the New York AM session. That's from a high term standpoint, but on the 4-hour we had not yet traded above this 4-hour inefficiency right here, this better value gap. So I was not that bullish and I was not that bearish as well. I was more on the fence. So that uncertainty, it was low probability to me, and I did not take the setup even on the demo. But retrospectively, the setup played out quite well actually. Price rejected the sell side. It rallies. There's 5 minute market shifts right here. I noted that. Price retraced down into this balanced price range. All of this is back and forth. It's referencing London session low. The first reasonable value gap is the first here. So actually from here at 9:30 opening price right up till 9:47, we have no fair value gap. There's no inefficiency. That's why I was saying this is low probability, and this is you can see right here I'm annotating high resistance. The liquidity run conditions are here. It's a low probability session this morning for sure, and I'm saying New York PM highs should have been taken or have been swept by now, but they were induced. So this rally up, I was expecting it to take this New York PM highs already, and not seeing that happen right here was fishy. So I was doubting, and there was a lot of uncertainty. So this was actually low probability, and I did not take this setup. But maybe a one contract low risk setup would have happened here. I actually outlined it. That's why I drew the Reaper. This is the screenshot before the fact. In this screenshot right here, I draw this Reaper, and I'm looking for it to be inverted. I want to see price trade above it, find support by retesting and rally. But I did not trust the setup enough, and I got distracted doing other things. And yeah, price got into it, rejected, pre-market highs delivered, and the draw liquidity for the day delivered. That's where my objective was, and I think that was all for this session that I was interested in. Price continued to gravitate higher right up to the New York opening gap, and we see launch consolidates right up till the open. So right here we'll find the open at 1:30 opening price. It comes in here. So that's the 1:30 p.m. rather 1:30 p.m. opening price. Now the market on close macro spans from, and there's something very interesting about this macro today in terms of a reference. It's usually a macro that targets the liquidity of who is profitable during that particular time period, or it runs to the target if the target has not been met at this point in time late in the session. But then you can see price opens, it trades down, so it goes against this morning move, delivering the sell side to inefficiencies. There's buy side inefficiency, as you can see in the time frame right here. There's buy side inefficiency, rather buy side imbalance, sell side inefficiency. So buy side is delivered, but sell side is inefficient. So this inefficiency here and this inefficiency here requiring to be redelivered. That redelivery happens after 1:30 in the New York PM session. So you see the New York PM session trade down, it gravitates lower, trades even below 7 a.m. Reaper. You can see the bullish reference in the Reaper here, and then price in the New York, in the market on close macro, we see a retracement. This retracement stops dead right here. It references the previous day's high, which was actually, if you could look back, my draw liquidity for the session. So these levels are very powerful. Previous day's high, previous day's low for the last 3 days. Vital. Now this was all for the New York PM session. The silver bullet was mainly used to trade lower, delivering those inefficiencies. So that's the function of this particular New York PM silver bullet. And you can see on the 15-minute chart, structure shifted bearish. It was actually a candle up. On the 5-minute, you see a retracement right here, toggling to the 5-minute chart on regular trading hours. On the 5-minute chart on regular trading hours right here, you can see market structure shift and price retrace higher. So the sell in the afternoon session was not as clean, but the buy in the morning session was clean, and it was clean for 2 reasons, and I'll close. So I'm giving you the 2 reasons and I'm closing. This buy setup, this long, the requirement for higher prices, we saw the daily rejecting the sell side. We saw the daily rejecting the New York opening gap. This one low, last line of defense, New York opening gap. The daily chart rejected this. We saw it looking for follow through, and follow through came in here with market structure shift and this rally. This rally is rejecting sell side, moving towards previous day high, which was the draw, And that's the first reason. The second reason is found on this 15-minute time frame, regular trading at 15-minute time frame to the left. I noted this 1 hour sell side imbalance from here right up to here. This is sell side imbalance, price inefficiency. This portion of price action traded lower, but it's deficient. It's deficient in buy side delivery. So price trades higher during this New York AM session. From here right up to here, this move higher is redelivering the inefficiencies here. I drew this out 2 days ago. Price was supposed to, yeah, right here. This is the delivery on Thursday, more than 2 days ago. So this is the delivery on Thursday that created this sell side imbalance. Now on Friday, we did not see it traded or redelivered. Price simply found resistance at the lower quadrant and traded down. But on this Wednesday, we see that redelivery. So that was always a draw in combination with this previous this high. You will see that it falls at a very good level and price moves higher. At this point, you can see it going back and forth, probably redelivering the inefficiency, sales imbalance, price inefficiency. So that's it for this review. If you found this insightful, hit that like button, subscribe to the channel, and I'll see you in the next video with more value like this.